Here we are in the pre-market. It's 5:25 a.m. It's Pacific Standard Time, 12/14, 2011. Using the E-mini 100 Nasdaq futures as a tool that carries over into the cash market in an hour and 5 minutes when the opening bell, where that cash market and the buyer and the sellers will meet at that time. And at that time, there will be long trades and short trades and how people set up their trades. So the most important thing to know is how this pre-market is so valuable and gap up and gap down, but knowing where the sentiment is that you came right up here and you filled a gap right there to this trend line right at resistance, and you slide that bid, and you can see down here where that consolidation was. Then it's very clear to us that they have their little breakout run to the highs as they do, and they get right up here, okay, and here's right where they go, and that's exactly right on the other side of this diagonal trend line is where that reversal is in play. So what is it? Sell into strength. What does that mean? That intraday highs in high beta stocks like Google, Amazon, Baidu, Priceline, and CRM, many others that we cover, Amazon.com. Those stocks and earnings forward looking we're in the middle of a holiday month. And the thing about it is the psychological part of that selling will be a rollover into the opening bell. So that means when your equities are going to put in their intraday highs here, as they did yesterday, one of the things that we're going to cover here is how this 635 put was marked down to 520. We had an MMT in there with bids and ask at 530, 540, selling on the first pass at 640s. Then as it would pull back for secondary entries, then selling into the 710 by 730s, and how they would pull back to where the first exit was right around the 640, 650 price, is that you would buy more to get eventually up to, at that time we were talking about the 8.5 by 890 bid and ask. And then what happened late in the day, you can see that put option, that thing had a wonderful breakout. So when you went up and made that high, and it finally did, you had that immediate reversal. It took a little bit of time with some whips and some little wiggles and jiggles and whatnot between your public buyer and seller. But the tremendous amount of money that was at that wholesale bid at the time, and now the last print was 1120 and the high was 1280 yesterday. There's that 635 put. Let us not forget the 310 call. You got marked down. The original close was 870 and you got marked down to 310, but the last print was 450, and this one here was still marked down. And so that 630 today gets marked down to support level, and you mark this up on the opening bell. What you see happening here in pre-market is forward-looking trade management for the gap opens. See, you're slightly above it right here. Bid and ask with Google. See that? Now, here are your futures market. So the same trade will apply. That means that the markdown here will be the minute that you get that high up, and the minute they get that markdown here, you only have milliseconds to make your entry. However, because you got to take a look that right now you can see how the futures are popping up here, and you can see how that ask is popping higher above that close right now, and you do have a slight gap open up, not much, very weak. So depending on where we're at in 1 hour from now, and with the E-mini futures popping up, they sold into the first pass. They got support. Now we got another resistance level, and it will reflect here in this cash market on the opening bell in 1 hour. Time 5:30 a.m. Pacific Standard Time. Here's an update on the pre-market S&P 500 E-mini futures as they have rallied up in the first 30-minute process. Is that you can see that they were buying right up here to the top of this wick right there, and we connected here at this key reversal level, and then they've come back in and they're running them back higher. And this is in pre-market. Yes, it's a futures contract that trades directional movement correlated to the indexes of the S&P 500 index. They will follow their patterns mathematically. So the first chance they got, they sold that resistance. Now they're coming back up here, and the time is 5:42 a.m. Pacific Standard Time. The thing that we want people to understand is how the original opening in this cash market was, as to how, once again, the opening bell cash market will be between the buyer and the sellers, and how the same type of behaviors, identifying the behaviors, that's what we do. Leah will be happy to read that to you. So we're going to be watching both of the markets. And once again, is as we have clearly said, up at the highs of the day, you're going to reverse, and the put side is the one dominating in this video. You talk about markups. Hey, 870, 750 was still the lower close. Nasdaq E-mini futures are popping up, and that's holding your Google up. So identify the opening bell, pre-market futures, pre-market training, and most importantly is how do I position my entries between the public buyer and the public seller. Okay? Well, they were very happy at one moment to run this up to this reversal high and then come back up and then roll over. And that's what equities will do on the opening bell, which will be in 45 minutes from now, about 46 minutes from now. And we're just reviewing the pre-market buy and sell behaviors in the futures market, because that's going to carry over. And here is your E-mini 100s. There's your first reversal. Got back on the outside of that trend line. You're popping right back up here at that reversal level. And it's very light volume. Pre-market futures update. E-mini Nasdaq 100. How to trade the opening bell in the cash market using the E-mini S&P 500. How they bought it, but then they sold into the major resistance levels, and this will carry over in the leadership Nasdaq 100 stocks in the Nasdaq 100 index. You will know that stocks in the S&P 500 index, also the leaders, will sell into resistance in the cash markets on the intraday bell today. And we remain selling into resistance levels on the cash opening bell. Once they come in, they run them up in your delta. You're going to get these reversal bars, and they're going to happen just like this. And this is your pre-market behavior in the S&P. Rally up, bam, come down, and we're reversing. That's what the public sentiment is in the pre-market